Hey everyone, it's Ivan here. In today's video, we take a look at the rise of buy now, pay later companies such as Afterpay, Openpay, Sezzle, Splitit and Zip. I'll discuss how they each work, the benefits of using these services, and how these companies make revenue. We'll also briefly look at their share price and how big they are in terms of market cap. Hey guys, if you'd like to support this channel, please click the like button on this video. And if you haven't already, please click the subscribe button and click the bell notification. That'll really help me out a lot. Now, let's get started on today's video. These 5 buy now, pay later companies allow you to make purchases by breaking up the total amount into smaller amounts which you pay in installments over time. As long as you pay all of your installments on time, you won't have to pay anything extra. For example, if your car tire needed to be replaced urgently, but you didn't have the $120 available on the day for a replacement, you could buy the tire today and pay for it over time using one of the buy now, pay later services. The first installment is made on the day of purchase. So, if you were to pay for the replacement tire over 4 installments, you'd only need to pay your first installment of $30 on the day, and then the other 3 installments of $30 over time. Purchases using these services can be made both online and in store. These types of services, which don't charge customers any interest, can be a very useful and beneficial alternative to credit cards. From the customer's perspective, they are getting a free, no-interest loan that they pay back eventually over time. However, it's important to note that if you don't pay back the installments on time, you'll be charged a late payment fee. So to avoid these fees, make sure you have enough funds in your account to cover the payments on their due dates. So why are these companies seemingly giving out interest-free loans to people? How do they make money and stay in business? The way these companies make money is that they charge the store a small fee on each transaction, just like credit cards do. The fee they receive allows them to provide interest-free purchases for their customers as long as the installments are paid back on time. Although these companies allow customers to buy now and pay later, they don't all work exactly the same. We'll now go through all of them and see what they have in common and how they differ. Starting with Afterpay. Afterpay allows you to make purchases both in-store and online. Afterpay splits all purchases into 4 installments. The first installment is paid on the day of purchase, and the remaining 3 every fortnight after that. Approval takes seconds, and your order ships as it would have using any other payment method. If you're shopping online at checkout, just select Afterpay as your payment method. Instantly create a new account and complete your purchase, or use an existing Afterpay account. If you're shopping in-store, you'll need to download the Afterpay app, create an account and scan your barcode at checkout to complete your purchase. All Afterpay purchases are settled within 6 weeks over 4 installments. It's as simple as that. Openpay works very similar to Afterpay and can be used online and in-store. However, offers more flexibility with payment plans which range between 1 to 24 months depending on your purchase. You'll still need to pay the first installment on the day of purchase. The remainder can be made either weekly or fortnightly. Sezzle offers online-only purchases and works pretty much the same as Afterpay. 4 installments are paid every fortnight, the first being paid on the time of purchase. Splitter is the most flexible in terms of installments. You can choose to pay over 3, 6, 12 or 24 installments. ZipPay offers both in-store and online purchases and works the same as the others. Just select ZipPay as your payment method at checkout for online purchases, or sign into your Zip account for in-store purchases via the app. ZipPay also gives you the choice of weekly, fortnightly or monthly repayments. A minimum monthly payment of $40 is required. All of these services are quick and easy to set up and start using. Now that you know a little bit about each of them and how they work, let's look at each company's size in terms of market cap. All 5 of these companies are listed on the Australian Stock Exchange. In position 5, we have Openpay, which has a market cap of 243 million, being the smallest of the 5 companies we have. In position 4, we have Sezzle with a market cap of $351 million. Splitit takes up 3rd position with a market cap of $488 million. In position 2, we have ZipPay with a market cap of $2.24 billion. In 1st position, we have the market leader Afterpay with an impressive $18 billion market cap, which is higher than all the other companies combined and then some. These 5 companies initially had their stock price dive significantly during the COVID-19 pandemic, but rebounded quickly. If you were able to identify the opportunity presented, you could have made a killing in the stock market. Alright guys, we're going to have a quick look now at each of the 5 buy now, pay later companies' share price over the last 12 months. So starting with Afterpay, prior to the shutdowns of all the businesses and the whole pandemic situation, Afterpay was trading at about 38, 39 and upwards of that amount. And then when the market started to take a hit, it got all the way down to $8.01. As you can see from the 52-week low, it was $8.01 you could buy 1 share of Afterpay. So that was roughly probably around 18th or 19th of March 2020, and then it just did something incredible. Investors started to invest and buy shares at a rapid pace, and over the next few days and months, Afterpay just went up and up and up, steadily as well. And it's currently trading at $67.50. So incredible. The pandemic had an initial effect on their stock price, as you can see, but then eventually people had faith in the business and invested heavily, which got the stock price up to $67.50. Okay, so let's do a hypothetical. So let's just say you had $1,000 to invest and you got Afterpay at its low point. Of course, you're not going to get it exactly then, but we'll just use it as an example. So let's just say you got it at $8. Okay, so you divide your $1,000 by $8, which gives you 125 shares. So if you times 125 shares by today's market value of $67.50, your $1,000 turns into $8,437, which is remarkable. For just a few months of investing, if you got it at the right time, you would have more than 8 times your money. So Afterpay is an amazing stock to have bought at that low point. Now let's look at Openpay. So Openpay's low point was 32 cents per share, which is really low. So let's say you had $1,000 again to invest, and you bought at their low point, hypothetically, 32 cents. You would have 3,125 shares of Openpay for a $1,000 investment, and now it's trading at. It actually got up to $3.50 or thereabouts in June, but then it's gone down a fair bit since then. But today's market value is $2.26. So let's see how much you would make if you sold it at today's value. So you would have $7,000. So you would have 7 times your money if you took the opportunity. Okay, let's have a look at Sezzle now. So Sezzle's low point was 35 cents a share. So if you had 1,000 shares divided by 0.35, you would have had 2,857 shares times today's value of $4.18. You would have $11,942. You would have 11 times, almost 12 times your money. That's just incredible. What an amazing stock. If you were to get it at the right time and sell it at the right point, that's crazy. That's amazing. So it's no one's not the stock market's never certain. This could have gone down even lower, could have gone up and down. But if best case scenario, you would have made a lot of money with this stock. And now split it over 1 year. Let's have a look. Their low point was 20 cents. So $1,000 invested at the best opportunity of 20 cents. Gives you 5,000 shares. And let's just say we sold that today at $1.38. You would have made $6,900. So 6.9 times your money there. So yeah, the stock market is very risky. Things go up and down. It's not really something you can control. But if you're a long-term investor, you can make some money out of it. And if you're very lucky, you might even make a lot of money in the short term if the stock peaks at the right time. So that's all I wanted to share in today's video. Just wanted to go through all the different buy now, pay later companies that are available to use, and just having a look at their share price over the last 12 months, and if you were to invest in these companies at the right times, how much money you would have made. If you enjoyed this video today, do me a huge favor and please subscribe to the channel and like this video. It would help me so much. I look forward to seeing you all in the next video. Have a great day. Good night, guys. Bye.